Hello everyone, this is Juan Sarmiento and today is Friday, March the 4th. I was thinking first to cover some trades that I could possibly make, and you see that it's not a good idea, and I'll go through them. Akamai, and you can see they all have jumped quite strongly, which would mean a good opportunity. You can look at the earnings and they beat expectations, such as Akamai is one of them. Big jump from the bottom, and volatility is the problem. Although the volatility is below 40, when I take a look at the trade tab and scroll down so that I can see today's options statistics, the current IV percentile is 54. That's just too much. Okay, that means to me that the volatility could still decline and hurt us. So that's not a good candidate, in case you wonder. Okay, if you run across something like that, avoid it, particularly at this time where the markets are in a yearly bottom and the volatility is pretty high. Okay, let's move on to Amgen. Also, big move. Earnings were good here. They beat expectations. The market went up, then down with the rest of the market, the stock that is, and then now it's going back up. And the volatility here is at 26%. Go to the trade tab, and then I see that the current IV percentile is 59. It's just too high. AVGO today jumping very nicely, and they beat expectations by a wide margin, so it looks pretty good, but the volatility is still very high here at 43. So I don't need to look any further. 43 is above 40, and that means it's too high. BBY, same thing here. It jumped with earnings. They beat expectations, I presume. Yeah, no, it's about the same as expected, and the volatility is dropping, and it will continue to drop in very nice in the 50s. So no way. I can't trade that. TG, that's target TGT, and also nice jump with earnings. The earnings beat expectations by a wide margin, which is all good, but the volatility is still a little high. Okay, 36 is less than 40, so we go to the trade tab and examine this, and it's at 64%. So it's a little too high in terms of where it is in the range. Okay, you see the range here. It has been as low as 21%. So 38% is too low for this stock, too high for this stock. Okay, so we don't want high volatility, so we can wait. Okay, AVGO is moving nicely. I like that, but the volatility is still high. It might pull back the volatility as the stock breaks to new highs, if it does. Okay, and then we would reconsider. I will keep this list as candidates, and we can check it up next week. Look at the amount here. My net liquid value is over 100,000, so 102. So that means we are more than double the account since we started this back when. Okay, and here today, to date, this year, today is a very nice day, $2,224.50, but for the year we have a $10,000 increase. And you remember that last year we were in the 80s thereabouts, so we've been doing pretty well. Okay, so what do I do now? Let's go through our trades here, and for that I just say current account and see if we need to adjust anything. Organize them alphabetically, and let's go first with AXP, and you can see that I have the current trade. I have not made any modifications, and it says June and March 18th, and that's 2 weeks from now. Let's go to the Analyze tab. Here is my trade, and again, remember, this is the same as what you see here. The current position is the same as the original trade. No modification has been made. If you want, you can say Analyze Trade and hide the position, and it says that we have a profit of $1,241.94. So if we hide the simulation, it's exactly the same number. Okay. Do I need to make any changes? Well, go to the add simulated trades, and here you see that the position, the 18, is 14 days to go. We would be concerned to do a rollover when we have 7 days to go. Okay. Right now, it's looking pretty good, and looks like the stock is declining rather strongly. Volatility is picking up. Okay, so what do you think is going to happen? Well, if it continues on lower, it doesn't mean we're going to lose money, because it's actually delta positive, but the Vega, the volatility should increase as the stock goes down. If it rallies from here, it should land in my cone. And so either way, I would suspect we will win. Let's go to Juniper, and Juniper is sort of the same. Let's go to the monitor tab, and you can see, yeah, it is consistent with what we have here. So no corrections, no rollovers yet. And again, March 18, that's 14 days from now. It looks pretty nice. If the stock keeps going down, volatility should increase, and we will continue to make profits. Today is a big day for this stock, for this trade. Okay, but we turned a loser into a winner. Hopefully it will stay that way. Okay, let's move on to TER, Teradyne. And in this case, we have a delta negative. See that? It's going over this smiley face, or below the smiley face, which means we could adjust this. It's negative 24, that's not too bad. And let's go to the monitor tab, and we have made plenty of adjustments to this. And you see here what we have done so far this year, 22.32. Okay, and the market value is $822. Okay, and now let's see what we can adjust. We see 135, that's the two shorts, and the two longs, 135, 135. And so 2 to 2, so that was a cone. If you see that alone, it's a calendar cone right there. Okay. Now, on the put side, in addition to that, we have right here at a 110, one put right there. Okay, and that is going to turn positive soon. On the long side, it's at a long gone 116, 170 calls. Okay, this is where we are right now. This would regard as useless now. And let's say analyze closing is worthless. The long calls are worthless. See that? 0. Let alone the 70. 0. So they are there as lottery tickets in case for whatever reason there is a big news on the stock and it rallies that high. I would appreciate it, but I doubt it. Okay, so we have this put at 110, which is right where we are. All right, so are we going to roll it down? I don't think so. If I were to close this, then it will make it too bullish. If you were to sell something below that, let's say the 105, it makes it neutral. You could do it and it would be neutralized. And do I want to stay bearish? Yes, I do. It's moving like it's going to break down. And then that one individual put would make my day. So I'm going to let it ride. If the stock rallies from here, well, I have all these 135s. What if the stock goes to 135? I have these shorts and I have the calendar shape here. The shorts and the 135 puts and calls. That's what we have. Okay, so if it rallies from here, we collect money here. The price The value of the trade is $800 right now, so I'm not risking much. So I'm going to leave that alone. Let's move on to UPS. Okay, we have a combination here. Okay, first of all, we have the 110. Let's remove that, and we have the 210, 210, short 210. Okay, I think I'm gonna close that portion. Okay, because we can close it. We have the March expiration. What if the stock stays here perhaps next week? We could close it at a better price. Okay, so let's see. If I close that, I select this small portion and say analyze closing, double diagonal with a 210 price only. There it is. See how it turned into a flat line? Okay, that's that portion, the 310. If I get out of that. Okay? What about the rest? The rest looks like this, rather bullish. 23 delta. And what is it? Well, obviously the 210 is canceled out. We have a 190 put, which is way out of the money. Positive. We have obviously at some point I had adjusted that put, and now it's pretty useless, I rolled it down, and what I did was I sold something that was more valuable and replaced it with this in case the stock continued, but now it's just a lottery ticket. We have the 220 here, 220, that's 220 shorts. And we have 220 longs, 240, 220 calls and puts. And yeah, that's a good trade by itself, isn't it? Remove this 190. Yeah, that trade is okay, but the rest is pretty useless. So let's we see this 210 here, 210, and long 210, and the other two says 230, March 18, same expiration as my longs here. That means that I rolled it up, and now it's 230, and that's probably worthless as well. If I were to sell that, analyze closing. Well, it's got 30 cents there. You might want to get it. And they put at 190, analyze closing. That's a little more at $122. At $1.23, so it means $123 in case you want to sell that. Okay? So if we do this, the 190, and yeah, there it is. This is what we could get rid of and get some money out of it, and then leave the 220 trade. Okay, let's see. How would I do this? Well, obviously, this portion is 4 legs, so this will have to be done separately. So let's do them all, just to see how it goes. Okay, we will get rid of this one, and then there it is, gone. Okay, so that makes it easy. Now we can sell the call and the put. They themselves form a very wide strangle. Okay. So I would rather sell them separately rather than as a unit, because it would be very hard to sell, I would suspect. So let's sell them separately. And because they don't have much value, it doesn't bother me too much. And it may look easier here than it is in reality. sell those out of the money calls. But at some point, you can just sell them. And right now, the volatility is high enough to, people are buying and selling options no matter what, because the volatility is high. The options get very pricey and easy to sell, okay, and buy for that matter. Okay, here we are, and that's the remaining trade, and I'm happy with that. Let's unmark everything else, because we have the leftover trade, and that's a good looking trade right now at $408. Okay, if you want, you can go to the monitor tab and look for UPS, and then see we have $9,000 in that trade. Okay, we remove what was essentially garbage to get it out of our way and allow less confusion. Okay, and then Wells Fargo, look at that. It's a bearish looking trade. Look at the deltas. Okay, so we need to correct this, wouldn't we? Look at how many long call puts we have. We have 15. How many shorts? 9. So we have 6. We could sell 1 by 1, 2 by 2, whatever, You can just, you might say, well, 216 delta negatives is pretty high. Do I believe the stock will continue on going lower? Well, it looks that way, doesn't it? It looks like this solitary, abandoned doji here, or, it looks like it's going to go further down. It broke to a new low, and you can see that the Ichimoku is going to turn red. The stochastic looks bearish, but it looks like it might reverse again. So I'm going to sell one just to take advantage of the situation, but I think it might continue to go lower. So let's close this, analyze, sell, and we're going to sell just one of them and see what the deltas turn. And you can see that I bought those originally for $3.55, and that they're trading at $8.65. Okay, so I'm going to sell one of them. Well, I lied, because I had already sold 15. I already sold 3, so that this price displaying here is actually lower than I originally paid for them. Okay, so you can see that it's 122, and I'm going to let it be, all right? But if I think the stock, you always have to think, what if the stock bounces back up? Would I be okay? I think so, because it could land in this area. 58 is not that far away if the stock does rally. If it goes above the Ichimoku cloud, then you have the 58, and that's when you would take additional profits. But right now it looks like it's going to continue to decline. That's my impression only. Okay, volatility is picking up, so yeah, that looks great. All right, so that's about it for today. Okay, so at a time like this, when the volatility is reaching highs, you can check it up on the VIX. Check the VIX and say, well, it looks like strong today. It looks like it's breaking to a closing high. Okay, so the volatility is picking up. Take a look at the SPY and so on. Okay, that's the VIX. But take a look at the, let's say, the Dow Jones. Does it look like it might break below the previous low, or it might form a bottom? If it begins to go up before it reaches, it might come and retest that, or it might rally before it reaches the low. Keep an eye on the stochastics, because the stock might reverse and begin to rally again. The stochastics is sort of pointing upwards, but if it breaks down and goes below this line, then it could potentially break below the previous low. I know that I'm not saying much, but I'm just saying keep an eye on those things. It would be more than obvious when it does what it's going to do. Right now it doesn't look very obvious because the stochastics is pointing upwards, but the Ichimoku cloud is very definitely red, which means we are in a bear market. And the volatility is on the rise, which is also an indication of a bear. That's for the Dow. Let's go look for the VIX, obviously hitting new highs. It's part of the test here. The Nasdaq, you can see here, it just broke the stochastics. It parted ways with the trend, which means it could potentially break below the previous low. Keep an eye on that. Otherwise, look at the trend line here. It tried to get over it and failed. And of course, the Ichimoku cloud will be another area of resistance. Keep an eye on those things because they will reveal a lot. They will tell you a lot as to what is going on. Don't rely only on price because those indicators tell you, oh yeah, I think the stock could go down. Or you might say, no, I don't know what's going on. It's too confusing. Whatever is better than not knowing. And you won't know if you just look at the chart. Okay? And draw those lines, those trend lines. They're important. They're good indicators. Okay, let me just show you. I'm going to take this line. Where's this line? And I go from the top. Take that, take this, and that's my line now, okay? It needs to break that line. Okay. That line is important, so draw it in your own chart, okay? Because it needs to break below it. If it doesn't, well, that's your trend. The trend is down. And the previous line did not break. That line was not, the one that I just erased, was not broken for a closing day. It was broken on the open, during the trading day on yesterday, but it didn't break below, and now it's failing to do that. It decides to go the other way. That's all for today. Thank you for joining me, and I'll see you next time. Bye-bye.